Yes, very good evening to all of you. All right, let's wait for everyone to join. Okay, today we are going to discuss one very important chapter. I would say important because the last three chapters, 3 to 4 chapters of your syllabus are important. So you can expect many questions from companies incorporated outside India because it's a new chapter. Also, very important is audit and auditors. These chapters are extremely important for theory, case based questions, as well as case based MCQ. Accounts of company, dividend, management and administration. 100% questions expected from this. Okay, 100% questions will be asked from this chapter. So let us discuss declaration and payment of dividend today. You have joined today. I think it's very near the exam. Everybody is busy studying. Yes, they may watch the recordings later. Let's discuss. So, declaration and payment of dividend. This chapter covers sections 124, 125, 126, 127. From this, 123, 4, 5, and 7. They are important. Good evening. Good evening. Right. So, most important for case based question is section 127. Okay, most important for case based question section 127. Also important 124 unpaid dividend account. If you ask me what is important for exam, transfer to reserve is important for case based question. Is it compulsory to transfer to the reserve? Answer is no. Depositing in 5 days, this is important for MCQ. Important, yes, this is important for case based questions. What if there are insufficient profits and we are utilizing the reserves? We are declaring dividend from the reserves. This is important. Types of dividend, I don't think a question will be asked. Unpaid dividend account, I have prepared a timeline for you. Now, this timeline will help you to learn the entire concept. No, the marathon will not be in Hindi. The reason is that students, they learn in Hindi, they understand in Hindi, but they are not able to convert that in English and write it in the exam. So it is better that you learn in English, understand in English, so that you are able to write in English. Only then you will get good marks. So your sentence formation and everything should be proper, no? And don't worry, I think you're writing the paper in English, right? So we are using very simple English. You're going very slow. You won't face any problem. All right. So yes, I was telling you that this is important for this timeline that I have prepared. Okay, I have prepared a timeline This timeline is important for theory question. It can be asked for theory question. This is most important for case based. You have to learn the penalty provision. Okay, you have to learn, because this is important for case based question. Also, you need to learn that when is it not considered as an offense, section 127 exceptions. Again, you need to learn this for case based question. You need to know the scenarios when when is it not considered as an offense. Non payment of dividend is not considered as an offense. It's a very small chapter. There are only 5 sections, so all of them are obviously important for exam. Now, will a question be asked on what is dividend, what are the kinds of dividend, basic? I don't think so. Question has never been asked on that. But since we are revising the entire chapter, you need to know something about dividend. So dividend is nothing but a share of company's profit distributed among members. It is not important for exam. I'm not wasting time on this. It is a return on capital for shareholders. Equity dividend, yes, this can be asked somewhere in the case based question. Now, on what is the dividend based? So, there are two factors. One, it is based on the profitability of the company. The more the profit, more can be the dividend. It also is based on the dividend policy of the company. See, if we leave it in the hands of the shareholders, they will want all the profits. Okay, so if the company has on 100 rupees, they will say distribute all this money in the form of dividend. But please realize that the company also requires money for the growth, development of the company. So we cannot distribute the entire profit in the form of dividend. So law is very smart. They say that the dividend will be recommended by the board of directors after considering the requirements of the company. So the board of directors will say that we need some money for the growth, development of the company, for developing a new product. This is balance. This we can distribute in the form of dividend. So it is recommended by the board and then it is declared by the members. It is declared by the members. This is a normal, I should say, agenda in every annual general meeting. It is declared by members in the annual general. So it depends on A, the dividend policy of the company after satisfying, and also the availability of profit after satisfying the needs of the preference shareholders. So it depends on the dividend policy, how much the company is willing to deliver, give, what has been the past dividend percentage. So we need to maintain that. So it depends on the dividend policy of the company and the availability of profits. Depends. More the profit, more dividend can be given. Less the profit, we will not be able to give that much dividend. Then we can utilize the past profits, the reserves, and then we can distribute dividend. Dividend is not properly defined in the Companies Act. If you read the definition given under section 2 clause 35, it simply states that dividend includes interim dividend. That's it. It has not gone to define that dividend is distribution of profit, it is a return on investment. They have not defined it properly. They have simply said that dividend includes interim dividend, which means that the provisions applicable to dividend are applicable to interim dividend also. Interim dividend is the dividend which is declared between two annual general meetings. So it includes interim dividend. It means that the provisions of final dividend apply to interim dividend also. Okay, so the provisions of final dividend, they apply to the provisions of interim dividend also. They apply to interim dividend also. What are the sources of dividend? See, now we want to declare dividend. So from where can we get the money? So you can use the current profitability, profits of the company after keeping aside the depreciation, after providing for depreciation. So current year's profit, if the current year's profits are insufficient or I don't have profits in the current year, Then I can use the profits of any previous financial year, again after providing for depreciation. Or I can also utilize both. Students, it is very important for us to note that we cannot use securities premium, we cannot use CRR, we cannot use any kind of capital reserve for distribution in the form of dividend. We can only use the money which is available as free reserves. So you cannot use securities premium, you cannot use revaluation reserve, you cannot use capital reserve, CRR, DRR. They are all capital reserves. Dividend can be declared only out of revenue reserves. Revenue profit means something which you have earned from regular business activity. So you can use the current year's profit, you can use the past year's profit, you can also use both. Like this time I have insufficient profit, so I use both. And you can also use the money which is provided by the central or state government in pursuance of a guarantee given by that government. So let's say, for example, that there is an airline which is on the verge of bankruptcy, but in order to maintain the market sentiment of that company, the share price, they want to maintain it because they know that the company may revive. So the central government is giving guarantee that, see, this is the amount of dividend that we are ready to give you. Use this money to distribute so that the market sentiment is maintained, so that people are not worried. See, if today I am giving you 10%, in the previous year I have given you 20%, 15%, that is the average rate of dividend. If today suddenly I don't give you any dividend, so you will feel that the company is not doing good, the company doesn't have any profit. That is why they're not giving dividend. So dividend is actually a marker, or I should say it is a direct indicator of the profitability of the company. So if we feel that the company is giving dividend, it means it is sound, it is earning profit. And if the dividend is not given, it means that the company is not doing good. People will start exiting from the company. Share price will go down. That is why we say, even if there is no profit in the current year, we are allowing the company to utilize the past profits to declare dividend. Okay. But students, here we need to know, I don't think that will be asked expressly in the exam, but yes, while writing the theory, you will have to mention that you cannot use the unrealized gains. Okay, you cannot use unrealized gains. Unrealized means I have not sold the asset, I have not realized that profit, so I cannot use it to declare dividend. I cannot use revaluation profit. I cannot give dividend from notional gains. These are not free reserves. I cannot use notional gain. Before declaring dividend, I need to, okay, before declaration of dividend, I need to provide for depreciation as well as accumulated losses need to be written off. Now, do I need to transfer to reserve? It's purely optional. Let's say that your father gave you 1000 rupees during Diwali. You don't think that you will spend this 1000 rupees. What will you do? From this 1000 rupees, you will keep 600 rupees aside for emergency, or you may want to use it in the future. Let's say you want to purchase a mobile, or you want a friend, you have to give a party to your friend, you have to buy something for your girlfriend. So yes, you will keep this money aside, but the remaining 4000 rupees you will utilize. Now, keeping money aside is purely optional. Okay, it is purely optional. We cannot force you to do that. Yes. So it is advisable, because tomorrow, what if you don't have any profit? So you can utilize this reserve. Tomorrow, if you don't have money, then you can use this reserve for, giving, buying something for yourself or your friend, or giving a party, or buying anything you want. Similarly, we tell the company that keep some money aside for emergency. Like, what if today you have profit, but next year you don't have profit? So you can utilize this money for distribution in the form of. So it is purely optional. Before declaring transfer will be of any amount that the company feels is right. They may consider appropriate. It is left the discretion of the company. Discretion of the company, it means it is left to the option of the company. Your wish, your desire. Discretion means wish or desire of the company. This is asked as a case-based question. So please highlight this and mark it as important. Amount of dividend, including interim dividend, it has to be deposited in a scheduled bank in a separate account within 5 days from the declaration of dividend. I also have a timeline for you. As soon as the dividend is declared, students, please note, as soon as the dividend is declared, within 30 days, you have to pay it or at least issue the dividend warrant, and the other person has to claim it. But law says that as soon as the dividend is declared, then within 5 days, it has to be deposited in a separate bank account opened with scheduled bank. Okay. So you can add this in the timeline that within 5 days you need to deposit. The deposit is required only because because once the dividend is declared, okay, once the dividend is declared, it becomes an obligation of the company. It becomes a debt due by the company. You have to pay it. So what if the company utilizes that money for some other purpose? So we say that you first keep that money aside. As soon as it is declared, it becomes an obligation of the company. You keep that money aside and then you can use it for distribution of dividend. Okay, so that money has to be kept aside within 5 days. What are the different types of dividend? So dividend is classified on the basis of time and on the basis of nature of shares. On the basis of time, it is divided as or classified as interim dividend and final dividend. On the basis of nature of shares, it is classified as preference share dividend or dividend on equity shares. Now, the act is actually silent whether these provisions apply to dividend given to the preference shareholders or equity shareholders. But after reading the provisions, we can conclude that the dividend which they are discussing is only for equity shareholders. So dividend can be interim or final. Now interim dividend is the dividend which is declared between two annual general meetings. It is declared by the board of directors. It is not to be confirmed by the equity shareholders in the general meeting. Interim dividend is it is proposed, declared, everything by the board of directors. What about final dividend? Final dividend is recommended by the board and it is declared by the shareholders in the annual general meeting by passing an ordinary resolution. I have a detailed note for this. So detailed note says on the basis of time, it is either final dividend or interim dividend. Interim means it is declared during the financial year or between two annual general meetings. Meaning is the same. Okay? It is declared during the financial year or between two annual general. So during the financial year, whatever I declare, or maybe the financial year is over, but I have not yet conducted the annual general meeting. So let's say that my financial year begins on 1st April 2023 and ends on 31st March 2024. So dividend which is declared during this year and maybe my annual general meeting was on 1st of August. So during the first quarter, that is April, May, June, yes, during the first quarter, I declared dividend. So this dividend will also be considered as dividend for the financial year 23-24. So dividend declared between two annual general meetings or dividend declared during the financial year. It is proposed as well as declared by the board of directors. It may be ratified by, yes, it needs to be ratified by the shareholders. Only interim dividend needs to be ratified. Final dividend need not be ratified. That was removed through an amendment. Why is it ratified? See, ultimately, you are using the money which was for the company. You're using to declare dividend. So shareholders will only confirm it because see, every decision has to be supported by the shareholders. So you will propose, you will declare also. Only thing is shareholders will confirm. Yeah, we are okay. We got dividend. We are very happy. Provisions of final dividend shall apply to interim dividend. This we concluded through the definition. The articles of association must allow declaration of interim dividend. So the authority must be given by the article. Final dividend is recommended by the board, but it is declared by the shareholders in the annual general meeting. Just an ordinary resolution needs to be passed. I have already prepared this note to save time. Just an ordinary resolution needs to be passed. This is one of the ordinary businesses in the annual general meeting. Once declared, it becomes a debt. I already discussed this. It becomes a liability, so you have to pay it. That is why we deposit it in a separate bank account. It cannot be revoked. Non-payment will attract penalty under section 120. On the basis of nature of shares, you have preference dividend and equity dividend. Preference dividend is received at a fixed rate. It is only given when there is profit. It may be cumulative or non-cumulative. We already know what is the meaning of cumulative, preference shares, and non-cumulative. Cumulative means the dividend, if not paid in a particular year, will be paid along with the dividend of next year. Non-cumulative means that the dividend is not paid in a particular year, it will lapse. This may be asked as a case-based question. That is why I have mentioned it over here. Dividend will be payable either in cash, check, warrant, or electronic mode. Like I receive dividends through my bank account. Okay, I have provided my net banking details, so the dividend is received through my bank. So it may be either paid in cash, check, warrant, or any electronic mode. I can also give it in kind. It can be given in kind. Let's say that, sorry, that was underwriting commission. My bad. Cannot be given that was underwriting commission. It can be given in cash, not in kind. Cash, check, warrant, or any electronic mode. Underwriting commission can be given in cash or kind. It is payable to the registered shareholder or to his order. Order means authorized person. Or it may be payable to the banker, like in case of net banking. So everything is to the banker. Either give it to the registered shareholder, like you give him cash or you give him check, or to his authorized person. It can also be given to the banker in case of directly when the amount is credited to the bank. Now, students, do you remember I had mentioned that the dividend may be declared either out of profits or reserves. Now, if the profit in the current year is either inadequate or there is no profit, but still you want to declare dividend, this is done just to maintain the goodwill of the company. Like, we have been giving dividends since 5 years. This year, if we don't give, what will people think? So, if you are utilizing the free reserves, there are certain restrictions. Why? See, free reserves were basically for the company. Okay, free reserves were basically for the growth and development of the company. Now, you are utilizing this free reserve for distributing dividend. See, we are not concerned about what you are doing with your current year profit. But you have kept something in reserve. It is generally for some purpose. Now you're distributing that, the creditors are also scared. So that is why there are certain restrictions imposed. The rate of dividend should be less than or equal to the average rate of dividend during the last 3 years. So these are restrictions. Okay, so you need to ensure that all these restrictions are complied with. They are cumulative restrictions. All have to be complied with. The rate of dividend that you are giving should be less than the average rate of dividend in the past 3 years. If the company has not declared any dividend in the last 3 years, then this provision will not apply. Now, let's say that I have reserves of 100 rupees. Okay. Whatever I withdraw, the total amount withdrawn should be less than or equal to 10% of the paid up share capital and free reserves as per the latest audited balance sheet. So it should be less than 10%. Whatever amount that I am withdrawing should be first utilized to set off the past losses, and also you should ensure that the current year's dividend is also provided. Whatever balance remains, okay, balance should be at least 15% of the paid up share capital. Please note, students, here it is paid up capital and free reserves. So how much can I withdraw? Which is less than or equal to 10% of the paid up capital and free reserves. But whatever is balance should be at least 15% of the paid up capital. Okay. So this and balance. So you need to learn this because it is asked in exam. The company is not allowed to declare dividend if they have defaulted in repayment of deposits or they have accepted deposits from the public. We had discussed last time only eligible companies can accept deposits from the public. So you have accepted deposits from the public. Okay, you have prohibited the, you have not complied with the provisions of section 73 and 74. You are claiming that you don't have money to repay your deposits and you're declaring dividend. First, you use that money to pay off your existing liabilities. Then we will allow you to declare dividend. So that is the logic. Let us now discuss the timeline for unpaid dividend. So you can write down section 124. So we have declared dividend, right? We declared dividend. Law says that within 5 days, you must deposit that amount in a separate bank account. See, the timeline is very clear, students. You declare dividend, within 30 days, you have to pay it and the shareholders have to claim it. Now see, if money is going in the bank account, very good. But if you are giving check or you are giving warrants, they should deposit that check. They should exercise that warrant. They should go to the bank, obtain money. People are lazy. Within 30 days, they should have done all this, but they are lazy. So law says that within the next 7 days, so as soon as your 30 days are over, within the next 7 days, the company will deposit that unpaid or unclaimed dividend in a separate bank account, again opened with scheduled bank, which is known as the unpaid dividend account. If you don't do this within 7 days, you will have to deposit the money, but now along with interest at the rate of 12% per annum, which will be calculated from the date of default. Please note, students, that this interest, it shall be available for the benefit of members. So if the company has not paid dividend, they will deposit this amount, the unpaid dividend amount, in the unpaid dividend account. And if they don't do that, they will deposit along with interest at the rate of 12%. Whatever interest that they have deposited, that will also be utilized for the benefit of members. Now, as soon as I deposit this amount, within the next 90 days, see, people may have not claimed that money because they say that we didn't receive the dividend warrant. Why? Because our address was old address. It was not updated. So the company will say, see, this is the name, this is the last known address and the unpaid dividend amount. Please come and claim it. So they will put a list and display it on the website of the company as well as any other website approved by the government for this. So if people claim, "Arey, you received dividend, I didn't receive." Quickly he went to the website and he saw, oh, I forgot to update my address. Okay, he forgot to update the address. So then he will go and claim that money from the company. So that is why we say display. Now, as you deposit that money, it will remain in the unpaid dividend account for 7 years. After 7 years, if that amount is still unclaimed, then we will transfer that amount plus the shares also to IEPF, that is Investor Education and Protection Fund. But what if during these 7 years, okay, in 1 year, that shareholder had claimed dividend? Law says in that case, shares will not be transferred. So if the dividend is claimed in any 1 year during the 7 years, The shares will not be transferred. Whatever is the unclaimed dividend for 7 years, that will be transferred. Shares will not be transferred because in those 7 years period, at least in 1 year, you claim the dividend. A person claiming the amount may then apply to the company for the payment of dividend. So, see, even if it is gone to the IEPF, you can still, by simple paperwork, claim that amount of unpaid dividend even after you come, even if you come after 10 years. The company will pay it. You just have to, perform a simple paperwork and you will even get back your shares. You will even get back your shares. So don't worry that my shares are gone, my dividend is also gone. Nothing is gone. It is for you. It's just kept with the government. Now, what is IEPF section 125? What can be asked? What amount will be credited and how will it be utilized? So, question can be asked on that. If a question is asked on the formation, you can write that it is established by the central government. It is credited with specific amounts that we will study. Because money is involved, you need to maintain proper accounts. If accounts are maintained, you need to get them audited. So the accounts shall be audited by the Comptroller and Auditor General of India, and the audited accounts and audit report shall be submitted to the central government. What will be credited in this account? So see, the central government grants. Central government gives you, see, look at the name. Investor, education and protection. So you will need money to create awareness about dividend and that you should claim the dividend. Donations, unpaid dividend, any interest or income from investments of the fund, we will not keep it idle. You may have invested this money, so whatever income is received, you will credit. Application money due for refund. Now, I received application, but that was not sufficient. My minimum subscription was not met and money is still with the company. After 7 years, it will be transferred to IEP. Matured deposits, debentures, interest, people have not claimed credit over here after 7 years, and interest. Sale proceeds from fractional shares unclaimed for 7 or more years, unpaid dividend, unclaimed dividend. Shares whose dividend is unpaid or unclaimed for 7 years, any other amount. So all this will be credited. How will you utilize it? For refund of the unclaimed dividend. See, it is very simple. I had credited over here. Now, if somebody is coming to claim it, I will give it from here only, no? So, application money, matured deposits, everything. Now, distribution of disgorged amount. Now, what is the meaning of disgorged amount? The disgorged amounts, it means that amount which you have obtained from unlawful means. Okay, you can write down the meaning of disgorged. It is just a basic meaning which I am giving you. The amount obtained from unlawful means. So, let's say that the company's employee had committed some fraud. Okay, company's employee had committed some fraud. So we caught him. Whatever amount was received is credited over here. So now the aggrieved party is demanding compensation. That compensation will be paid from here only. Court charges or money which I had spent for hiring a lawyer. If the court allows, that money can also be withdrawn from the IEP. Promotion of investor education, their protection and any other purpose. Very important, and this is the last part of our discussion. What if the company fails to distribute dividend? See, once the dividend is declared, it must be paid within 30 days. At least you dispatch the warrants. If they receive the warrants after 30 days, company, you are not at fault. At least you dispatched it within 30 days. In case the dividend is not paid or even warrant is not posted, every director who knowingly, okay, this is important, who knowingly was a party to the fraud will be punished with imprisonment up to 2 years, fine at least 1,000 rupees per day for default. Company will be liable for simple interest at the rate of 18%. So you have to pay the amount along with interest, and the directors will also be subject to imprisonment. But these are certain exceptions. In these cases, you cannot blame the company. Dividend could not be paid by reason of operation of law. There is some dispute with regards to ownership. So because we don't know who's the owner, we cannot pay the amount. The shareholder had given directions, please directly deposit the amount in my bank account. But he gave wrong bank account number. Are we went to deposit, we went to credit, but name did not match. We had old name, now they have changed the name after marriage. They didn't inform us. There is a dispute regarding the name. Now, shareholder had given directions, but we could not deposit. Very important, students. Those directions could not be communicated, they could not be complied, but the same has been communicated to the company, to the shareholder. Now, we had gone to credit the bank account, but name was not matching, account number was incorrect, so we could not follow the instructions given by the shareholder. You could not credit the dividend, at least inform him that this was the problem. Those directions could not be complied with, but the same has been communicated that yes, we could not comply it, this is the reason. What if the company did not comply and they did not communicate? Then the company and the directors will be liable. Communication is important. There is some dispute with regards to the dividend. We are not able to judge who the true owner is. Dividend has been adjusted against any sum due from the shareholder. Again, can be asked as case based. Now, I had to recover 50,000 rupees towards call money. And the dividend payable is 70,000. So instead of paying him 70,000, claiming 50,000, can adjust it. Adjust. And pay him only 20,000. Adjust it. Pay only 20,000. For any other reasons. But it is not due to the fault of the company. So a very small chapter, students. But I have simplified all the provisions for you. If you study the chart book well, I'm telling you, each and every concept will be revised and everything has been simplified for you. You can still purchase a soft copy of this chart book from my website, capreetiaggarwal.com. And tomorrow, I will not be able to take a live session, but I will definitely upload a video on accounts of company. Okay, so tomorrow again we meet at 7, but it will be a recorded session for accounts of company. Okay, live will not be possible tomorrow. I am tied up in some work, so sometimes I am not able to take the live session, but I will definitely not stop your studies. We will meet for a recorded session on accounts of company. Okay, so guys, I take your leave and I hope you were able to recall all the important concepts. These are exam oriented revision lectures. If you wish to purchase the full course, it is available on my website, capreetiaggarwal.com. Books, test series are also available. So please visit my website, capreetiaggarwal.com. We also have a compiler. We have a soft copy also, which is a compilation of all the past exam study material, RTP, MTP questions. Answers are arranged in this format: provisions, facts, analysis, conclusion. So if you want to score exemption, this book is the key. This book compiler will help you to get exemption in law, and trust me, it is possible. All right, students, I take your leave. I will see you tomorrow. It's a recorded session, but we will complete accounts of company.